or good afternoon. I'm Dr. Fasasi Kazim Adiola. Today, we'll be looking at a very important topic known as cashbook. Cashbook is so important that no organization in the world can do without using cashbook. Let's talk of it. A sole proprietorship business, a partnership business, a limited liability company business, even a cooperative society cannot do without keeping record of their daily cash transaction. In that case, it is important for any student having knowledge of accounting to have better understanding of how to keep cash transaction record. Today, we'll be looking at cashbook. What is cashbook? Cashbook can be defined as a subsidiary book used to record cash transaction. It's a subsidiary book strictly used to record cash transaction. In our previous videos, we have looked at credit transactions, where we said when goods are sold on credit, the appropriate subsidiary book is sales-day book. When you buy goods on credit, the appropriate subsidiary book is purchases day book. Where goods are returned back to the supplier, the appropriate subsidiary book is return outward day book. And when customer return goods back, the appropriate subsidiary book is return inward book. Where cash transactions also occur in an organization, the appropriate subsidiary book is cash book. That's why we said it's a subsidiary book used to record cash transaction. Cash book is a dual book because it is a subsidiary book. It is a subsidiary book where transactions are first recorded, and also is a ledger, because it has the fixtures of a ledger, such as debit and credit, balance carried down and balance brought down. If you look at it, we say it's a dual book. We can call it a subsidiary book. At the same time, we can also call it a ledger. Why? Cash book is the only book that has characteristic of a subsidiary book. The reason being that subsidiary book is a book of original entry where cash transactions are first recorded. And by this, the first place a cash transaction is recorded is the cash book. At the same time, cash book is different from other subsidiary book in such a way that it has debit and credit, and at the same time, it has balance carried down and balance brought down, which are features of a ledger. Meaning, we have two books of accounts, subsidiary book and a ledger. Cash book has characteristic of subsidiary book. At the same time, it has characteristic of what? A ledger. That's the reason why we call it a dual book. It's a dual book. Now, let's look at this. There's another name for cash book that we want the student to know. Cash book can also be referred to as receipt and payment. We can also call it receipt and payment. Cash book is divided into two folds, comma, debit side is the receipt side. Debit side is the receipt side, which perform a function of cash inflow. The debit side of the cash book is known as the receipt side, and the function it performs is cash inflow, which means in your daily business, all cash inflow into the business, I repeat, all cash inflow into the business are recorded on the debit side, which is the receipt side. And credit side, which we know as the payment side, perform the function of cash outflow. What this means is that anytime you are making payments on your daily transactions, the payment side is the credit side of the cash book. And that's why we call it the receipt inflow of cash and payment outflow of cash. And what it means is this: if you are keeping record of cash book, the debit side is for your cash inflow, that's your receipt. The credit side is for your cash outflow, which is the payment, and that's credit side. The reason is this: in business, as you're having cash inflow, you also have cash outflow. For example, there's no how you are going to pay for rent without cash outflow. There's no how you are going to purchase goods from your supplier, there will be cash outflow. There's no how you will pay the salary of your workers, there will be cash outflow. All these transactions are meant to be recorded on the credit side of the cash book. Also, your customer pay into your business as a result of goods sold to them. That's an inflow. All these are to be recorded on the debit side. What it means is this: the cash book also has two sides, like ledger. But for cash book, the debit side is for inflow, receipt. The credit side is for outflow, payment. And why do we prepare cash book? The purpose of preparing cash book is to know how much is our cash balance at the beginning of every accounting period. After the receipt and the payment during the accounting period, what is our closing cash balance? Every business must know its opening cash balance, and after every transaction per day, or at the end of every week, or at the end of every month, the same business must be able to know the cash balance at the end of the what business, which we refer to as closing balance. In that case, every business needs cash book, and every student needs to know how to prepare cash book as an accounting student or as a student offering accounting as a course. Now, Cash book has classification. Cash book has classification. And what we want to look is this. What are the classification of cash book? Classification of cash book. Cash book is classified into three. One, we have what we call single column cash book. Two, we have what we call two column, or we call it double column cash book. And lastly, we have what we call three column cash book. We'll be looking at each of these cash book. Like this video, we'll be looking at the single column cash book, which we have the illustration on the board. But let's start today's with single column cash book. Single column cash book. Single column cash book is a cash book that has column for date, particular, folio, and amount on debit and credit side. In practice, single column cash book is used to keep record, for businesses, for business entity that transacts business, with only cash or with only bank transaction. What this means is this: if in a business or a business entity accept only cash as a form of transaction, as a form of payment, and such business entity did not accept any transaction by check or by online banking, this kind of business is recommended to use single column cash book. For instance, if your business deals with only cash and carry, you don't accept any other form of payment like online banking or check, you have to operate single column cash book. Or for instance, some businesses today don't even accept cash as a form of transaction. All their transactions is done with banking transaction. In that case, for any business that uses bank as a source of receipt and payment without accepting any form of cash, the cash book to be used in this type of business entity is single column cash book. Let's look at the format of a single column cash book before we move on to illustration. How does a single column cash book looks like? That's what we call format. This is the format of a single column cash book. It has a debit side, it has a credit side. It has an heading, single column cash book. Now it has date of the transaction, it has particular, it has our folio, and at the same time, it has amount. On the other side, it also has date, it has particular, it has folio, and it also have what? Amount. Now, the debit side is the receipt, which is for cash inflow. And the credit side is for the payment. Anytime you make payment, this is for cash outflow. This is how a single column cash book look like. On the debit side, it has date, particular folio amount. On the credit side, it has date, particular folio amount. Where all transactions are by cash, you have to make use of a single column cash book. Let's look at today's illustration. Let's look at today's illustration on single column cash book. We have an illustration that said the following transaction was extracted from the book of Akin stores as at 30th September 2022. September 1st, commenced business by cash 80,000. September 3rd, paid rent by cash 20,000. September 6th, bought goods on credit from Alima store 60,000. September 15th, bought goods by cash 40,000. September 28th, sold goods by cash 100,000. September 31st, paid salaries by cash 40,000. Required: prepare, record the transaction in single column cash book. The question said we should record in single column. How? Even if the question did not require us to prepare single column cash book, we should know that from beginning of that September 1st, all the transactions were by cash, which means this business entity, Akin Stores, transact all its business by cash. Either receipt or payment are done by cash. The appropriate subsidiary book for this kind of business entity is single column cash book because all transactions are done by cash. And we're also asked to transfer the cash book to what? Ledger, which is from subsidiary book to ledger. How do we transfer cash book to ledger? We'll be looking at that in this video. Our first requirement, which is requirement 1, is to prepare a single column. We'll now say the name of the business, Akin Stores. After that, we draw the format of a single column cash book. We divide it into 2 and we put debit, credit. We now say single column cash book for the month September 2022. Meaning this single column cash book is for the month of September 2022. We have the date, we have a particular, we have a folio, and we also have a amount. This is on debit side. On the credit side also, which is the payment side, we have date, we have a particular, we have a folio, and we also have a amount. We put the currency sign of that country, which is a naira, which is the currency spent in Nigeria. That's the sign, a Naira sign. Now, let's start solving. Commence business by cash. What you should know is this. You're only keeping the record for cash. This record, you are keeping it for cash. Meaning, unlike double entry that you record 2 times, under cash book, you keep the record once for every transaction. You are not recording twice. For each of these transactions, you are recording once, and you are keeping the record for cash. Meaning you are keeping record of cash. And what are you keeping record of cash for? You want to know the cash you are keeping the record for. Is the cash an inflow into the business? If it's an inflow, you debit. Is the cash an outflow from the business? If it's an outflow, you credit. Now, if the cash function is inflow, meaning the business is receiving cash, you put it on the debit side. If the business is paying cash out, which is the payment, they are using cash as a form of payment, you record it on the credit side. Let's start one by one. Commence business by cash. Commence business means this business is being commenced with cash, meaning there's an inflow of cash into the business. This record will be kept on debit side. September 1st. How much cash, how much inflow of cash? The inflow of cash into this business is 80,000 Naira. What is particular? Particular means the reason for Akin Stores to receive 80,000. Where did you receive the 80,000 from? The 80,000 was received from the owner, which is Commence. Commence there stand for capital. Mind you, you are not keeping record for capital. You are keeping record of 80,000 Naira cash. And what does this mean? There's inflow of 80,000 Naira cash into Akin Store from who? From the owner. And the owner is being represented with capital. Where do we get this capital? The capital is from where they put what? Commence. In our previous video, we said anytime you see the word commence, what you are going to put here is capital. Meaning, the reason for having 80,000 Naira cash is as a result of capital. Let's look at the second one. Paid rent by cash. We're only looking at the cash. When we are paying rent, is cash an inflow or cash is an outflow? When we are paying rent, cash will become an outflow because for you to pay for rent, cash will be serving a function of payment. And once you are paying out, you have to record it on the credit side of the cash book. Meaning, on September 3rd, you are paying how much out? You are paying 20,000 Naira out. What are you paying for is your particular. And what you are paying for here is the rent. Meaning, you are paying 20,000 Naira out for the purpose of rent. In that case, the business received 80,000 inflow. From 80,000 inflow, 20,000 was paid out for rent. On the 6th, bought goods on credit from Alima store. This transaction is on credit. And mind you, we don't record credit transaction inside the cash book. This transaction is to be recorded in a purchases day book. But the requirement did not ask us to prepare purchases day book, which means for this type of question, this is confusion. We are not asked to prepare purchases day book. We are only asked to prepare cash book. And this transaction is on credit. You will not post it to anywhere. You move to the next transaction. Now, bought goods by cash. When you are buying goods by cash, cash is serving a function of payment. There's no how you get goods from your supplier. You must pay. And the cash book is meant for receipt and the payment. Now, on the 15th, we are paying 40,000 Naira out from Akin store. But what are we paying for? What we are paying for is what I underline. That's bought goods. And anytime you have bought goods, what you are going to write here is purchases. In that case, let's check on the 28th. Sold goods. When you are selling goods, what happens to cash? Cash become an inflow because when you sold goods to customer must pay your business cash, and that's an inflow. On the 28th, how much inflow? 100,000. In that case, this inflow of cash is as a result of what? Is as a result of sold goods. Sold goods will be written as sales. I am not recording for sales. What I'm recording for is cash. There's inflow of 100,000 cash as a result of sales. There's outflow of 40,000 naira cash as a result of purchases. You're only keeping record of cash. This particular is showing us what happened in that transaction. There's another payment. You are making payment for salary on 31st. The particular will be salary. But what you are keeping record for is cash. In that case, you are having a 40,000, meaning we are paying 40,000 naira cash out. For what purpose? That purpose is what we know as what? Particular. And the purpose is already there. For the purpose of what? Salary. We have come to the end of the transaction. The next thing is to balance the cash book. How do we balance the cash book? The debit side of the cash book. The debit side, the total of the debit side is 180,000. The total of the credit side is 100,000. What does this mean? One side is lower, and the lower side always being the balance carried down. And if the credit side is lower, on 31st, you will come here and put balance carried down, which is balance at the end of the month. What do? You go to your calculator and find the difference. The difference is your balance carried down. That is 180,000 minus 100,000. You are going to have a difference of 80, and that's your balance carried down. Now, what does this mean? What this means in practice is that in the month of September, Akin Store has a total inflow of 180,000. And on the credit side, they have a total outflow of 100,000. They received 180,000 in September and paid out cash of 100,000. They are left with 80,000 in that business in the month of September, and that's what we refer to as balance carried down. After balance carried down, account is officially closed for the month of September, and this is your total it 80 plus 100, 180, 20 plus 40 plus 40 plus the balance carried down, 180. Account has been closed for the month of September. On the 1st of October 2022, you are going to have what we call balance brought down. That is, you are going to continue business in the month of October with 80,000 naira. And we have come to end of the single column what? Cash book. And the next is, how do we transfer the cash book to ledger? The way I'm going to show you how to transfer this cash book to ledger is also applicable to 2-column cash book, to 3-column cash book, and to any form of cash book. The solution 2 said we should post the cash book to ledger. Mind you, all entries in this cash book are single entry. Until this cash book is posted to ledger, that is when it becomes double entry. And after this cash book is being posted to ledger, that is when you can extract a trial balance. But this requirement does not ask us to extract a trial balance. In that case, how do we post cash book to ledger? Let me start from this. Cash book is a subsidiary book until when all items from subsidiary book will now be posted to ledger under accounting process. Let's start with the debit side. If you are posting cash book to ledger, posting cash book to ledger, all debit items in the cash book will be taken to credit side of ledger. Let me give you an example of one. What I mean by this. The first debit item here is capital account. Now I want to take this capital now down to ledger. It's on what side here? Debit. You will now take it to credit. That's September 1st. Where are you taking it from? From cash book. Your particular will be cash. How much is it? 80,000. I've taken the first item to ledger. The second item is 6. Debit, credit. You take these two, sales account. It's on debit side of the cash book. It's a debit item in the cash book. But taking it to ledger, it will go to credit side. September what? 28th. Where are you taking it from? From cash book. Your particular will be cash. How much is it? 100,000. Now, that's for every debit entry, the corresponding entry goes to what? Credit. Let's look at the second aspect. That's the credit side. Now, credit items in your cash book. When you are taking it to ledger, it will go to the debit side of the ledger. Let's see how this. Rent is on credit side of the cash book. When you open rent account, the rent inside your cash book is on the credit. But when you are taking it to ledger, it comes to debit entry. To complete the double entry, you also say September 3, and your particular will be cash, which is the heading here, and you have 20,000. The second one is purchases. Say purchases account. It's on credit side, you bring it to what? Debit side. September 15. Your particular will be cash. How much? 40,000 naira. And the last one is salaries account. In salaries account, September 31st, you bring it to debit side. And that's 40,000 naira. This is how you transfer cash book to ledger. And after that, you come here, you close the ledger. Balance carried down. You come here, balance brought down. Rent, balance carried down. And you come here, balance brought down. For purchases, balance carried down. That's closing of ledger. Want to understand it better, you go to our previous video under double entry. You will see how our ledger are being closed. Balance carried down 40,000 and balance brought down. we have come to end of solving. If you look at it, taking cash book to ledger, all debit items, each of them goes to credit. And all credit items, taking them to ledger, each of them comes to what? Debit. And after which the ledger are being what? Closed and balanced. The soft copy of this question will be attached to this YouTube video. You can download the soft copy from the link on this video. All our previous video with calculation, the question are on we have put the question in the link for you to download. Thanks for listening to this video. We really appreciate all our viewers, and we pray that as we are passing this knowledge, those who are watching it, for the sake of knowledge, may God Almighty increase them in knowledge and help them to pass their exam, and to also assist them to prepare a proper books for their companies and their business entity. Thank you.